Imagine showing up to work every single day for 4 years, with a company email address, paid time off, a direct supervisor telling you exactly where to go and what to do, and then finding out that your employer has been quietly, deliberately misclassifying you to avoid paying their share of your taxes. And when you confront them about it, they actually admit it over text message, not in a lawyer's office, not in some formal dispute, over text. That is exactly what happened to one worker. And what they uncovered is one of the most clear-cut cases of wage theft and tax fraud I have ever come across. Let's talk about what misclassification actually is, why it matters so much, and what this person can do. Because if you have ever had an employer tell you that you are suddenly a contractor when nothing about your job actually changed, this video is going to be extremely important for you. So here is the background. In the United States, there is a very specific legal definition of what makes someone an employee versus an independent contractor. The IRS uses a multi-factor test. The Department of Labor uses its own version. Most states have their own tests on top of that. And the core question in almost every single one of those tests is the same. Does the company control how, when, and where you do your work? If the answer is yes, you are an employee. Full stop. Why does this matter so much? Because the classification determines who pays certain taxes, who is responsible for benefits, and who gets protections under labor law. When you are an employee, your employer withholds income tax from your paycheck, pays half of your Social Security and Medicare taxes, that is 7.65% of your wages, and covers you under unemployment insurance and workers' compensation. When you are labeled a contractor, none of that happens. The worker pays all of it. The employer walks away paying nothing on top of your wages. So there is an enormous financial incentive for unscrupulous employers to call their workers contractors, even when those workers are legally employees. That is exactly what happened here. Now let's get into the full story because the details are staggering. This worker had been employed at their company for years. They had a signed I-9, which is the federal form used to verify employment eligibility. They had a signed W-4, which is the form employees fill out so their employer knows how much federal tax to withhold. They had a company email address. They received paid time off tracked through a payroll platform called Gusto. And every single year they received a W-2, the tax form that employers are legally required to send to employees. By every measure, this person was an employee. But at some point, the employer started doing something unusual. Instead of running the entire paycheck through payroll, they split it. Part of the money went through Gusto properly as W-2 income, but the rest was sent as a direct bank transfer, just money wired from the employer's account to the worker's account. And then at tax time, the employer issued a 1099 NEC for those direct payments. A 1099 NEC is the form used to report payments to independent contractors. So by sending that form, the employer was essentially telling the IRS, this portion of what I paid this person was not a wage, it was a contractor payment. That means no payroll taxes withheld, no employer contributions, nothing. This went on for 4 years. When the worker finally asked about it, the employer's response was jaw-dropping. He admitted over text message that the 1099 was issued based on how he deposited the money, not based on the worker's actual legal classification. Let that sink in. He was not saying the worker was a contractor because of the nature of the work. He was saying the 1099 existed because of how he chose to move money around. That is not how tax law works. You do not get to decide someone is a contractor simply because you paid them via bank transfer instead of payroll. And then the employer added something even more revealing. He said, again in a text message, that the worker had requested not to have taxes withheld and that this made them a subcontractor. Now there are a few massive problems with this. First, there is no contractor agreement. The worker never signed one. Second, even if a worker asks not to have taxes withheld, that preference does not legally transform them into an independent contractor. Classification is determined by the economic reality of the relationship, not by what either party calls it or how they prefer to handle withholding. An employer cannot simply hand someone the tax burden of a contractor because it is convenient for them. Meanwhile, the worker had text messages showing the employer directing their daily activities, assigning them to specific client sites, and approving time off. That is textbook employee behavior. That is control. The IRS specifically looks at behavioral control, whether the company controls what the worker does and how they do it, as one of the primary factors in classification. This employer was exercising that control while simultaneously pretending the worker was a contractor. He cannot have it both ways. There is more. The 1099 forms that were sent were not only incorrect in terms of classification, they were sent in mid-April. The legal deadline for sending 1099 NEC forms is January 31st. Missing that deadline by 2.5 months is not a minor clerical issue. It is a reportable violation. And one of the 1099s that was sent, it had no dollar amount filled in. It was blank. This employer was handing over essentially useless, legally defective tax forms. Because of all of this, the incorrect forms, the late forms, the confusion about what income was actually wages and what was supposedly contractor income, the worker had not filed taxes in 4 years. 4 years of unfiled returns. Now, to be very clear, that is a serious problem that needs to be addressed immediately, regardless of who is at fault. The IRS does not care why you did not file. They care that you did not. But there is a real argument here that the employer's behavior directly contributed to this situation, and that matters. Then things got worse. The employer sent an email unilaterally, cutting the worker's pay and changing their status to on-call only. No negotiation, no agreement, just a decision handed down via email. The result was a week where this person earned $50. $50. For someone earning roughly $27,000 a year, that kind of sudden reduction is devastating. On top of everything else, the employer had promised in writing, to pay a bonus for securing a new client. That bonus was never paid. A written promise of compensation that is not honored is not just unfair. Depending on the state, it may be legally actionable as wage theft. And then there's the paid time off. Because a portion of the pay was run outside of Gusto, the PTO accruals tied to those hours were never properly recorded. The worker is sitting on approximately 120 hours of unaccounted paid time off. That is 3 full work weeks that essentially disappeared. So what should this person actually do? The first and most urgent step is to consult with an employment attorney. Many employment attorneys offer free initial consultations, and cases involving misclassification, wage theft, and unpaid bonuses are often taken on contingency, meaning the attorney only gets paid if you win. This situation involves potential claims under the Fair Labor Standards Act, IRS misclassification rules, and possibly state wage and labor laws. An attorney can help identify which agencies to file complaints with and in what order. Second, preserve everything. Every text message, every email, every Gusto document, every pay stub, every bank transfer record. Screenshot it, back it up, store it somewhere safe that the employer cannot access. The text message where the employer admits the 1099 was based on deposit method rather than actual classification is extraordinarily valuable evidence. Third, file a Form SS-8 with the IRS. This is the form used to request a determination of worker status for federal tax purposes. When you file it, the IRS investigates and makes an official ruling on whether you are an employee or a contractor. The employer has to respond. This puts the situation on record with the federal government. Fourth, contact the IRS about the unfiled returns. There is a program specifically for workers in this situation called the Voluntary Classification Settlement Program. But more immediately, the worker should look into whether back taxes owed can be offset by what the employer should have been withholding all along. An enrolled agent or tax professional who specializes in employment issues can help navigate this. Fifth, file a complaint with the Department of Labor's Wage and Hour Division about the unpaid bonus, the PTO, and the sudden pay cut. State labor boards may also have jurisdiction depending on where this person lives, and some states have significantly stronger protections than federal law. This situation is not ambiguous. This is not a gray area. The employer signed the documents that define employment, directed the work that defines employment, and then constructed a paper fiction that said the worker was a contractor, and he put the admission in writing. That text message alone is the kind of evidence that makes attorneys sit up straight. If this has happened to you, if your employer has been calling you a contractor while treating you like an employee, if you have received 1099s when you should have received W-2s, if your pay has been split or your classification changed without your consent, do not assume it is legal just because your employer says so. Classification is not a choice an employer gets to make unilaterally. It is a legal determination based on the actual nature of the work relationship. Document everything. Get an employment attorney involved. File with the IRS and the Department of Labor. You have more options than you think, and the law may be more on your side than your employer wants you to believe. If you found this video helpful, make sure you subscribe. We cover real situations like this one every week, the kind of workplace and tax issues that most people do not find out about until it is too late. Hit that notification bell so you never miss one.